Merry Christmas, everyone. Today is December 27th, Friday. I took a trade today on a strategy I have been developing for about a month. It has almost a 100% win rate. Now, even though it doesn't win great every single time, I've developed this strategy so that you have the ability to get out for break even, a small win, or a large win every single time. I have yet to take a full loss on this trading strategy. It works out incredibly well. I'm super excited about it. I want to share it with you. So let's get right into the trade recap for today, and we'll see you over there. All right, guys, let's get right into it. I want to show you what I've been looking at. So Euro USD is about to hit all-time, no, I'm sorry, not all-time, but all-time for the last couple of years lows. Okay, so this is my long trigger, but this is effectively a really strong pivot point on the daily that happened 2 years ago. Okay, so we've been channeling down, and what I like to see, and I traded this long, is you get this aggressive dump. It pushes up and then comes back down and holds. So on this continuation, I traded this. However, I noticed that this is kind of just channeling, right? I've been waiting for it to pull the liquidity here so I can look for a short in this area. However, today, I saw it had reacted and started to dump against the trend. So I went down into the 15-minute, and this is what I was looking at. So we have an aggressive push up here. And this is my 2C, 2P strategy, okay? But it presented itself a little strange today, and I'm going to show you how I took this trade, okay? And this is beautiful. So effectively, the strategy is such. You're in a bullish momentum trade, okay? Before it completely fails, you're expecting that when it does start to fail, it's going to pull liquidity and at least make an attempt higher. It will either then fail or continue higher, okay? All we're betting on is that there's going to be a pull on liquidity. And what needs to happen is we've had an aggressive move up. So we have 1 pivot, 2 pivot, 3 pivot, okay? Now, usually we'll have a 4th pivot here, some consolidation, right? But today we had a pull underneath this point of liquidity. So this is not usual. Usually it's 1, 2, 3, 4, 5, 6, 7, 8, and then we get the pull, okay? So it's a 2-point correction is my entry, 2-point protection is my stop, okay? So today I wrote in my notes, said, well, this would technically be point number 2 because it's deeper than this point. Usually it would be point 2, point 1, pullback continuation, and then a fail. On a clear or a drop below the second point, I want to look for longs. On the 3rd point, I will add, and on the 4th point, I will stop out. So on the 5-minute, I went down, and I just marked it out like this. So effectively, we have point 1, point 2. A break of this is the buy. Point 3, this is the 3rd pivot. Point 4, this is the 4th pivot. This is our stop. So I'm saying to myself, when we get a pull of this liquidity, I'm going to buy. However, I tend to also buy on a test of the order block, and this is how the trade tends to work out. We can see how aggressively it worked out, and now it's failing, and that doesn't matter. And I'm going to show you where I also took my profits and why I took them there. On an actual continuation down, what will inevitably happen is you will interact and sometimes break where the short stops will be. So because this is starting to be a downtrend, shorts will have their stop up here. So this is going to be my target, okay? An interaction somewhere in here, this is my target. I'm thinking it's gonna push up, and then maybe it breaks and goes higher, or it falls, but I think it's gonna take out these shorts here and then go, because that's what the market will do. It will sweep liquidity. And the same situation here. If it continues, all these buyers are loaded up in here and their stops are below this. If stops get taken out here, there's going to be an exchange. That exchange will push the market higher as shorts take profits. Longs get stopped out. Buying might happen and the price will inevitably push up. It may push up here and fail. It may push up here and fail. How do we make money every single time this happens? So I have a buy order placed here on a test of the order block, and we get filled. My stop is here, and my target is here. Okay, on a pull of the 2nd point liquidity, which is our critical primary entry, which is here, we also get triggered in. And our stop is here, and our profit target is here. Because I think this is going to continue in a downtrend, I don't want to have a really big target. I just want that last liquidity point to be pulled before it falls, okay? So now this is what my trade looks like. Now both of these worked out really well. Look, it took out buy liquidity and immediately stopped, almost no drawdown, and then went and hit our target. Amazing. How do you trade this? So in this situation where it does not go in our favor, instead it comes down and pulls this liquidity, what I will usually do is I will take this back to the break-even entry if it was far away. Like let's say I got in here, okay? As this comes back up here, because I'm in drawdown on this one, I stop out of this one for break even, net zero. Okay, I've doubled into this position. Okay, it's similar to Wyckoff, I'm doubling down. As this pushes up and gets my first entry out, I will take one of my winning positions off. So this was a net zero, and this made me $200. Now the third trade I took, right, because I took 2 5-lot positions here, and I took 1 5-lot position here. This made me 0, this made me 200, this one made me 800. Okay, so I made $1,000 on this trade, and I was very right on it. In the event that this trade pushes up aggressively, like just like this, and then let's say it just starts to tank, I'm not gonna go full stop on this. It's already shown me that it's starting to move in a certain direction. So what I'll always do is I will take a livable wage amount of money off. Okay, if I want to live on $250 a day or $500 a day, and my profit target for each position is $1,000, on this position as it goes up and it's made me $300, $400, $500, I'll take that away because that is my walk around money. I get out of this for break even, I get out of this one for $300, $400, $500, and then my stop can be moved up. Now because my trigger entry was here, I'll just move my stop up to here, where now I'm risking like no money at all. And honestly, if it's gonna break back below this structure line here, I'm probably gonna get stopped out anyways. So I'll just move my stop to break even, or even I'll move my stop up to down here, so I'm at least making 50 bucks on that trade. And that's in a position where it doesn't actually work out great. It just has one good candle and then turns around and fails, which happens all the time, but I still make money on it. It pushes up and starts to fail. My first entry was in drawdown, now I'm out of it break even. As it moves into the money and I have 2 positions now, what am I doing? I'm taking some walk around money away, right? I want to put 1% in my account at least on these trades. So I get my 1% on this position, I take the 250 whatever dollars off, and I leave the remainder on. Okay, now what if we actually pulled the third area of liquidity here, and then instead of correcting down, we came all the way down here and then pushed back up? If I'm in that deep, and I see that it's pushing up, as we get somewhere in here, I'll probably take the whole trade off for a small loss. And on a situation like that, I'm usually able to get out for break even. And in my worst trades, I've taken this trade and back tested it over 100 times. In the worst situation in this trade, I'd never lose more than 1% on this, even when it goes against me. So if this was to pop up and then just start to dwindle and fade, okay, I have an entry. Let's say I got a presumptive entry. Here would be first, second entry, third entry, and then it pulls into here. As this moves up, right, and retests these lows, I'm not going to wait. I'm not going to hope. I'm not going to pray that it pushes higher, right? It's retesting lows. It's not looking good. I close the whole position out. I have a buy here, a buy here, and a buy here. The trade comes up into here. I'm able to get out for break even. This happens time and time and time and time again. Again, it's so easy to trade this. But again, you want to look at the structure. What's happening here? Liquidity has not been pulled. In this situation, it was pulled one time here. And that's why I want to go into the trade today, is because usually when I take this trade, it's not like this. There's been 0 LPs, 0 liquidity pulls. We have a push, a pullback, a push, a pullback, a push, a pullback, a push, a pullback, right? And then we're looking for 2 points of liquidity to be pulled. Now, let's trade this even in a different way. On the 1 minute, we have a run up here. We have 1 point, 2 point, 3 point, 4 point, 5 point, 6 point. Okay, 2 points of liquidity pulled, we buy. Okay, this falls down. 1 point is pulled, falls down here. Second point is pulled, we buy here. Third point is pulled, we buy again, we double down. Stops are all under here, and look what happens. Pushes up, first entry is here, second entry is here, okay? Massive win. We took out the highs. So that trade would have been very, very simple. Same situation, right? So let's erase these drawings. Let's get rid of this, and let me just show you what I'm talking about here, okay? So we have an aggressive run up, okay? We have 1 point, 2 point. We buy on a break of these lows. We have 3 points. We buy on a break of the third point. We have a stop. The stop is here. Let's see if this thing will work for me. Okay, and now here we have our trade. So it breaks down. There's been no pull on liquidity. We're understanding that in order for the market to continue higher, it needs to pull easy money liquidity. Now it can also reverse, but given that it has not pulled liquidity yet, there will be some re-attempts. That is what we're betting on. Okay, so pulls a second, we buy here. It pushes up, pulls the third, we buy here. Stops are here. What are we doing? We have a buy. Okay, we have a buy. Okay, stops are here. Stops are right here, right? And let's say we're just anticipating that this is going to be maybe at the very best head and shoulders, meaning that it's going to continue falling down. So where is the second shoulder? Where's the first shoulder, right? It's here. May not break those highs. Let's be modest. Let's say it just comes in and tests the middle or the low point of it. So we have a trade right here. Okay, moves against us, and now this is a 0.74 and this is a 2 to 1, 2.3 to 1. As this starts to move up, we move our stops up to the bottom. But we've already moved up here and we're almost at our profit target. So we might as well just go for the highs and move our stops to break even. Maybe we're just in a little bit of profit on this one because it was an early entry and we went in some drawdown. So because we're pushing up to our initial target on the first entry, we just take that one, okay? And now we made 250 bucks. And now we're in a really great trade here and we're break even on 2 more positions, all right? And we make 1,000 on each position. It's incredibly simple and it happens over and over and over and over and over again. It's so easily repeatable, okay? You find a strong situation, okay? A strong push here. Took out the highs, no pull on liquidity, okay? 1 point, 2 point, 3 point, 4 point, right? Second point, we buy. Third point, it doesn't pull it, okay? We could see this and buy here, but effectively we have a 2 points correction, 1 point, 2 point protection, and then we have 2 point correction. So our buys would be underneath here and underneath here. So this is our buy zone. Look what happens. Beautiful. So let's say you buy here, it pulls down into this order block and you buy again, right? You're able to get in with almost 0 drawdown. As this pushes up, you can say, all right, maybe it retests the highs, maybe it breaks the highs, but maybe it respects this fair value gap, okay? Maybe this does turn into a downtrend. I don't want to potentially hold this and then have a loss, okay? As this pushes up and clears the midpoint of the fair value gap, maybe we just take the win. So what does that look like on this trade? We take the lows here, all right? And then we add. We add as it interacts with this order block. We've got a doji candle right here. It interacts with the doji candle. We add again, all right? So our stops are like this. Underneath fourth point of liquidity, we're looking for a wrap back to the high end. Okay, we're moving into the fair value gap. Okay, this could just tank. So how about we look at this and all right, where are we going to move our stop? It's making a serious attempt to go higher. We might as well move our stops up to the low. Now what is our risk to reward? A 1.4 and a 5 to 1. Incredible. And we get it. Okay, and then as it starts to reverse, I technically won't play this twice because it could just fall through at this point, but you could have taken it again. Okay, why is this happening, right? Liquidity has not been taken out. That's why. Buyers are lining up their positions and they're chasing stops. As the stops become available and they get stopped out, what happens? It creates sell positions. Sellers who are active pick up those sell positions as buy positions. Their buy targets have been filled. Their sell targets have been filled. If the market wants to continue higher, buyers are going to take positions then. All right, it may not continue higher, but it makes another attempt. It happens over and over and over and over and over again. Okay. On the short side, aggressive selling, no liquidity is pulled. Okay, a little bit here, but we have 1 point, 2 point, 3 point, okay, 4 point, okay. So we have 1 point, 2 point, okay, so this is our stop. This is 0.4 and 0.3. This is 0.1 and 0.2. I'm sorry, this is 0.1 and this is 0.2. Okay, and we get it right here. Look at this. Brilliant. So our entry is here. Our stop is here. 1 point pull, we pull it here. We come up and we interact with the second one, right? We take this short. Our stop is here. We look for at least a sweep of the lows or potentially a retest of the shoulder area. Shoulder area is like right around here. We've got all these wicks, so we can just target that. It starts to push, pulls back, starts to push even harder. Okay, so it's either going to hit our target or we're going to get stopped out for break even. No reason to lose money on this anymore. You know, or as it starts to push, we had a pullback and a continuation. We move the stop up to where the top of the pivot is because there's no reason for us to risk taking a big loss here anymore. And we make that money. Okay, you only got one entry opportunity here because it didn't pull the third point. It didn't pull up here, right? It just tapped into this and rejected. Okay, you can trade this shit all day long. Let's go one more example. It's beautiful. Okay, we've got a run up here, 1 point, 2 point, 3 point, I'm sorry, 1 point, 0.4, 3, 2, 1. Technically, this is the second point because we've got 1 and then a little bit higher, 3.4 points. So this would be a large stop. So 0.4 is here. All right, 0.2 is here. So this would be a very large stop. All right, not something I would actually sit through. I'd probably put my stop out somewhere else. Maybe go on the 1 minute. Okay, pulls the second liquidity and look what happens. Immediately pushes up. Comes down again, immediately pushes up. Okay, now if we were to take this after it really simmered out, we really didn't get a good opportunity because look how long this was. Right? You want to see this happen in a short period. We've got a run up, a quick pullback, a quick attempt higher again. All right. If it goes for a while, it's invalidated, right? You wouldn't want to trade this all the way over here, right? It's already made multiple attempts. It's already failed multiple times. It could have really been accumulating selling volume here. So there's no reason to step in front of that train at this point. But if you did, and you were looking for a liquidity pull on this, how could you trade that effectively? Right? It comes down, it pulls it, you buy, pushes up, comes down, now you're in drawdown, okay? It pushes up and makes a very significant attempt here to continue higher, okay? So instead of having your stop all the way down here, you've got that significant attempt, right? 1, 2, broke the highs, it should not break this low. So now you can move your stop from here all the way up to here, looking for that push, and it didn't have any follow through. Right? But this would have been a very small loss. If you're risking 1% down here, this would have been 1/4% of a loss. You know, if you were able to accumulate in a position in here, then you could have potentially made 2% risking 0.5%, right? You would have had the opportunity to move your stop up, to add to the position and move your stop up. I can't talk. Okay? Same situation, aggressive run up. 1 point, 2 point, 3 point, 4 point. Pull on the second point. Look at that shit. Look how perfect it works. 1 point, 2 point, a pull on the second point, we buy. Stop on the fourth point, here. Add on the third point, here. Didn't even touch the third point. It pulled the second, right? Right? Push, pull, push. 0.1 takes out 0.1, comes down, takes out 0.2. We have a buy limit order on the break of 0.2. We get bought into the position. Our stop is here. Boom. Okay? In the event it actually turned around and went down a little bit lower to here, we buy again, okay? As it pushes up, we stop out of this first position for break even, and we hold this entry. As it pushes up, we move our stop up. As it goes to our first profit target, we take our target, we take our profits, we move our stop to break even, and then maybe it fails and we get stopped out for break even, or maybe we have a massive run that lasts. How many points is this? We bought here. How many points is this run? 633 points, and I'm not even getting the whole top. It's like 660 or something. It goes all the way up here. Where was the buy? Okay, so let's say you hold one and you're just holding it, all right? You're holding it until it takes out a good solid point of liquidity, all right? You buy here, it comes up, takes out this high, comes down. Let's say you're still holding this because you want it to hit a long-term high. And you get all the way up to your long-term high, and it pulls down, and it pulls this out, and makes this final attempt. All right, you almost 700 points here you could have gotten. All right, that's $700 on one lot. Okay, and the max drawdown you were in was, what is this? I can't even go. 23 points. You're welcome. You are welcome. Enjoy your free money. These are free videos too. Enjoy that money, and please let me know in the comments how well this is working for you, because this shit is amazing. I'm so stoked about this. This is my new favorite strategy. I have two strategies now that I'm using. Strategy 3, which is in a lot of my videos, and this, which is the 2-point correction with the 2-point protection, the 2C2P. Okay, my two favorite strategies right now, they're the only strategies I'm currently using unless I'm scalping. If I do like little scalps, I'll use my other 6 or 7 strategies for a little bit of money here and there, but those are my two primary strategies right now. I make so many videos about them. If you guys have any questions, please ask. I respond to all the comments. And until next time, I will see you guys. I love you. Merry Christmas, Happy New Year, and I will see you in the next video. Peace out.